I'm curious your thoughts on the general opinion towards venture capitalists in crypto right now.
When people meme on VCs, usually what they're referring to is VCs back some project, they give it a lot of money. The project launches a token, it trades at some insanely high FDV, there's a very low float, and then eventually it just sort of bleeds out over time and people say, oh, VCs are dumping, blah, 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 blah. I think this is wrong for...
Who's dumping?
Exactly. I think this is wrong for a number of reasons. For one...
Today's guest is Tom Schmidt, a general partner at Dragonfly Capital. Tom came on the show back in August of 2024, so it's been 6 or 7 months since he's last been on. But if you don't remember, Dragonfly has invested in, I believe, over 150 different crypto projects across a bunch of different sectors. Tom is very well versed in the space. He has his own podcast called The Chopping Block, which I like listening to sometimes. And I'm excited to have Tom on the show today. Welcome back.
Thanks for having me back. I'm excited.
So for those who don't know you, how'd you even get into this space? That's the first question I ask everyone.
This is kind of the childhood therapist question.
How are you feeling?
Yeah, right. Yeah. It was a little random, or not as random as some other people. I studied computer science undergrad.
That's not random.
Yeah, no. It was 2012. People were into Bitcoin.
Right.
I was into Bitcoin with other CS people. That was kind of it. It was just kind of an interesting new thing. And if you're kind of nerdy and into computer science, you find it Bitcoin interesting. And then honestly, I totally forgot about it when I graduated. And I was like, this is cool, but I'm kind of over it. And then kind of got back into it kind of 2016, 2017. I was working on some startup ideas, rediscovered Bitcoin, rediscovered Ethereum, and kind of fell back in love. So that's kind of it. Been doing it ever since.
Yeah, you worked at Facebook and Instagram though.
Yes. When I graduated, I was like, I need a real job. I need
something on the resume.
Yes, exactly.
Yeah.
I tweeted about this one time. I was on an email thread with Brian and Fred from Coinbase, because some investor in Coinbase, well, at the time, maybe it was 5 people, right? And I was like, they're like, oh, are you open to an internship? And I was like, no, I think I'm good. And kind of regret maybe not taking that internship. But I went into product. I was at Facebook, then I was at Instagram for about 3 years. Quit, was looking for something new. And I think the reason why Ethereum clicked with me the way Bitcoin didn't was sort of this programmability. And I had seen so much in startup land at that time around, you build a platform, people build cool stuff on the platform. And then you have this whole sort of developer flywheel that takes off. And that's been true across many different interfaces and platforms and sort of computing devices over time. And I think for me, something just really clicked with Ethereum and sort of what was happening and what eventually became DeFi. We didn't really have a word for it at the time.
Right. And
I joined 0x, led product there for 2 years. So if you used, Matcha or 0x API or your favorite DEX aggregator. And then I joined Dragonfly in 2019. I've been there 5 years. So
damn. 5 years is a long time in crypto.
It is.
Especially staying at one company.
Yeah, I think at a certain point, you get married to the fund a little bit, and it's kind of feel like we have a good working relationship, and people kind of balance each other out. And it's also just been a very fun role. I get to work with really smart, cool founders and help them do the thing that they're doing, and having fun doing it too.
Yeah, from 2019 to now, there's been a lot more blockchains pop up. You brought up Ethereum clicking. Does Ethereum still click for you, or are there other chains where you're like, I click better with that now?
It's funny you mentioned that. We on the chopping block last week, we were talking about this. No, you don't have to listen to it.
You should listen to it.
Yeah. We were talking about this exact phenomenon, and I still think the ethos of Ethereum is very valid, and I think that was again kind of what attracted me to the space. I think the problem that they suffer from is I kind of compared it to Linux, where Linux is not a consumer-friendly product. It's sometimes gets turned into a consumer-friendly product by a company like Google that can take it and use the kernel to make something like Android. But you would never tell your parents to
go start something
to buy a Linux desktop. That would be insane. You probably hate your parents if that's the case. Even though it is much more useful and flexible and robust in many ways than a lot of sort of direct to consumer operating systems or platforms or something like that. And so I think this is kind of the constant struggle is when you try to be everything to everyone, you end up kind of failing in all those different modes. And I think that is kind of a little bit of the answer with Ethereum versus a very simple monolithic L1 is, hey, maybe this actually doesn't do everything for everyone. And maybe this is highly opinionated, but for a end developer, for end user, this is a great, very simplified UX. If you tell someone to use Ethereum today and they try to use Ethereum, they would say, oh, no. I didn't actually mean use Ethereum. I mean, you should use a layer 2 that uses ETH and then settles onto Ethereum, and be like, what are you talking about? Versus Solana is such a simple choice, right? And ultimately, again, when I think about sort of flexibility, if you think about what most people are doing on chain today, they want to trade a token. That is like such a huge percentage of block space. And if you just kind of tailor your blockchain to just trading tokens, then, maybe that's actually kind of like...
Then you kind of win.
You kind of win. I think it's like a...
That's
you've kind of like perfectly fit the current market. So I think this was a very long-winded explanation, but I think overall, I'm still bullish EVM. I think we have some next generation EVM stuff coming out. We're investors in Monad. We're investors in Mega ETH. You get really, really low latency, really high throughput experience, but you get all the goodies from EVM land in terms of developer experience and contracts. And I think that actually should not be discounted. But for right now, I think that is kind of Ethereum's core problem is there isn't a really clean, compact bundle it can offer to users or to developers. It's sort of this amorphous blob, and that is good and bad, and mostly bad right now.
Yeah. I mean, I saw the post by Vitalik the other week about how they want to change the Ethereum Foundation, the leadership and everything, and it just seems like so chaotic and messy.
Yes.
And not a good look for Ethereum.
No, but I think that kind of goes back to like this question of what is a foundation even supposed to be doing? Like, I think,
That's a great question.
It's like you're, increasing like the GDP of the chain. It's like very amorphous. And to an extent, you also don't want to be too hands-on. Like, I would actually describe the Solana Foundation as, it's been to their success, maybe a bit too hands-on. Like, I think it's very hard to say that Solana is decentralized and there's actually this huge ecosystem of developers. And if the Solana Foundation went away tomorrow, the token price or the blockchain would not suffer. There is massive coordination, and that's okay. Like, that's there's nothing wrong with that. And I think that's actually the way most projects should start.
A lot of people would like to hear that.
Well, it is a fact. So if you know what, I will happily take a bet with someone on the price that the Sol would fall if the Sol Foundation went away or there was some issue with it. Again, there's nothing wrong with that. If you think about Ethereum 2017, way more concentrated in the EF. And I think that is maybe ultimately part of the root of some of the issues is you turn from being something that's actually driving development forward to giving out grants, having other client teams work on it, having other research teams work on even something as simple as staking. Effectively outsourcing that or liquid staking, outsourcing that to Lido. Again, in the long run, maybe it makes it more robust, but that kind of ruins it if the experience of using the blockchain is actually not as enjoyable, and therefore there aren't users and there aren't developers to actually and use it. So it's a conundrum. I don't think anyone has like a perfect answer. I don't think anyone's actually executed it super well, other than you could say Bitcoin by just ultimately not really changing. But I think the other thing that we've talked about too is just like developer reliability in the US. We're seeing this kind of now with like the Roman Storm case, or even individual Bitcoin developers being sued. And like I would like to see obviously some more legal protections for devs, sort of put into law or codified in some way, so that you can just have people developing smart contracts and not have to worry about, I need some complicated corporate legal structure. And I think that's ultimately how you get a lot of innovation. And that's again kind of what I look at when I look at like the Linux Foundation and kind of what happened in Linux in the 90s.
Yeah. You like Linux.
I like Linux. I would never recommend someone to use Linux, but Linux...
It's a good example.
I think Linux is probably one of the most valuable technologies in the world in terms of like overall GDP wealth creation.
It's like, Linux. You wouldn't tell your parents to use it.
No, of course.
And that's like how you feel about Ethereum.
Yes.
Yeah. But about like the proliferation of L2s. There's like a bajillion L2 chains for some that I'm like, okay, this makes sense. This is very niche, or this is a generalist chain. I'm not going to start naming chains, but you can name them.
Yes.
And think about like, is it too much or does it make sense? And then the fragmentation across them. Do you ever see them actually unifying in a way that like goes back to what is home base of Ethereum?
I think for a lot of L2s, I agree. There probably is not a reason for them to exist. Like, I think
There's not a reason.
No. I think a lot of teams, I mean, sorry. I'm not actually going to name names, but a lot of teams.
You can name ones that you think make sense.
Yeah. I mean, I think something like Base actually is putting on a very good example. I think someone once, actually was a Racer, a very famous, now dead Twitter account, said Base is BSC for white people. And I'm like, you know what? BSC is actually a good product. It's clearly, I mean, I checked it.
Binance Chain.
Binance Smart Chain.
Yeah, I was like,
I checked it. PancakeSwap did more volume than Uniswap today, which is the BSC preeminent DEX. And so there's clear some demand PMF for someone who wants an experience that isn't as decentralized. They don't really care. They're not. They don't need sovereign.
Like kind of on chain.
Yeah, exactly. It's somewhere between a spreadsheet and a chain. This is great. This is exactly what you want, actually, right? And if there's a
spreadsheet chain.
Yeah, a spreadsheet. And if there's a hack, like I'm going to get my money back. We're just going to roll it back and pretend that didn't happen. And I can trade tokens, which is again what people actually want to do. And so I think that's like a great example where you can just pick something up off the shelf, run it, and it just kind of works seamlessly. I think a lot of chains have taken OP Stack and tweaked it very, very slightly and then launched it, in part because I think the market is still rewarding people who have their own L2. I think that is a bit of an aberration. I think that will go away over time. I hope it will. Like, there's no reason. This I think is going to be a crazy
make a prediction.
Maybe, I know. I think it's going to be at least another, I don't know, 3-4 years.
They're still launching. Like they're still launching and or like about to.
Yes. And I look at old ghost chains too from like the 2017 vintage, and they're still trading the vintage collection and perfectly aged. And they still trade north of $1 billion FTV oftentimes. No, and so, who's trading these? That is a great question. I would actually love, if you're a VeChain trader, hit me up. I want to hear about you and your story.
VeChain's like sponsoring the UFC though, I believe, or one of those like martial arts type.
Well, I mean,
activities.
A lot of these projects have insane treasuries. Someone pointed to, what was it? Not Gnosis. It was Golem. The Golem. It was a decentralized GPU compute marketplace from 2017. ICO, huge ICO.
Of course.
I think they actually, they built it and like it works, but just no one really wants this. But they have an insane treasury because they did their fundraise when ETH was nothing. They held on to it. And so they have like hundreds of millions of dollars in this treasury. And I think there's a lot of projects like that where they have an insane treasury. They have this kind of ghost chain. They're like, what do I do with this money? And try to figure it out and try to get something going again. But
you ever invest in chains like that?
Ghost chains?
Yeah.
No.
Dragonfly.
It's too spooky. No, I don't.
I didn't know they were ghosts until, they died.
Yeah. That's true. No, I mean,
it's okay if you guys did.
I don't think so. I mean, we our fund one wasn't quite that vintage. We launched 2018. So there was definitely a like 2016 vintage or fund cohort that just crushed it because they did all those early ICOs that have done, did extremely well, independent of any actual traction. But pulling it back to this L2 question.
Yes.
I think that until that changes, people ultimately it's was it Munger, show me the incentives, I'll show you the outcome. The market is showing you the incentives if you're a founder, and until that changes, we're going to keep getting the same outcome. So I don't know. It's all, again, before the show, if we were talking about what we're going to talk about, and I was talking about people hating on VCs and high float, low FTV or low float, high FTV. Yeah.
We'll get your therapy.
Sorry, I didn't mean to jump the gun.
No,
and they're like, oh, these, and it was like, well, stop buying it then. It's like, it's like the VeChain traders. It's like, stop buying it. So ultimately, I think markets are rational in the long term, hopefully, fingers crossed. I think all this stuff eventually ends up correcting. I think irrational exuberance eventually kind of, loses its energy and things trend towards some sort of normality. But for right now, like why wouldn't you tweak, an OP stack slightly and launch your own L2 if the market's going to give you a very fat valuation? So I mean, for L2s, ultimately, again, it comes back to this thing where in theory, every L2 should be able to serve its own niche. And yes, and maybe it's a geo, maybe it's a type of user, maybe it's a function. I think some of those have done decently well. But in practice, a lot of them just end up looking like Optimism or Arbitrum, a general sort of purpose EVM chain that really doesn't have much distinguished end. I think there is just a lot of work required to get a healthy dev ecosystem off the ground that I think a lot of teams don't appreciate. So I think some of those will end up probably folding at some point, but who knows? Who knows how long things keep going?
Consumed by another L2.
Yeah. There's some L2 M&A.
Like a little carnivore carnage. Well, they all like consolidate.
There was, during this whole EF malaise, I think over the past 2 weeks, there was sort of a, I think, half-joking proposal by Hayden Adams, founder of Uniswap.
We had him on the show. Do you guys know Hayden?
Love Hayden. Great. To basically have the EF buy out like Optimism and Uniswap and like other DeFi protocols and just like integrate into the chain, which I think is slightly wrong. Like, I don't think you want. It's supposed
to be decentralized, so like maybe we shouldn't be buying out.
Yes. I think that's part of it.
Who am I to say?
Yeah, right. Let's let the market speak a little bit. Yeah. But I think actually, and Haseeb's favorite pitch is, I think, he thinks Ethereum should basically buy out like Monad or Near or Bera or like one of these sort of like next gen EVMs and like, okay, you guys want fast, cheap L1 block space? Here you go. And, some sort of a one-time inflation hit to sort of pay for the thing. And I think for a lot of people, they would probably go for that, right? If you want to hold
I think these chains would go for that.
I think the chains would definitely go for that for the right val. And I think users would go for it, right? Ultimately, you're offering a chain split and it's, do you want ETH Classic, or do you want the new ETH, whatever you want to call it?
B.205 or whatever.
Yeah. That it's fast and cheap and feels great to use. And I don't know, people might go for that too. So to be fair, I think this all has like a 1% chance of happening. So this is just fun speculation, which is what we love to do. But I don't know. I think there really is not a lot of sort of crypto token level M&A. There's like the Ferrari merger from maybe 2 or 3 years ago. But for the most part, like there isn't really that happening. I don't know why.
I think that is. Yeah. You don't know?
I have some theories. I mean, part of it is I remember for the Ferrari thing, friends with some of the co-founders of Ferrari, and a lot of the stuff was just very bespoke and required a lot of heavy lifting to kind of make the actual terms of the merger work, versus maybe corporate M&A where there's already a lot of established case law, a lot of sort of templates effectively you can use. And two, I don't like, in theory, right, if you're doing an acquisition, the sum is going to be greater than the whole of its parts. In crypto, I don't think that often makes sense. Like there's kind of some weirdness around like why an FTV might be the way it is versus a market cap, like the reason why something is trading. And the market doesn't necessarily reward the same metrics or KPIs that maybe traditional equities investors do. And so again, I think right now, like the equation just doesn't work in terms of the cost that goes into it and sort of the outcome. Maybe that will change, but maybe we'll get some EF acquisition kind of stuff going on. But for right now, I don't see a lot of attractive opportunities if I were a protocol team.
Do you feel closely tied to Vitalik because you both have Miladies?
Well, he got his after mine. I'm an OG Milady. I'm a Milady minter, for the record. I'm going to put that on the record. Okay. I actually don't know how that happens. I think it's very...
You don't know how he got one?
I don't know. Like, yeah,
massacred someone else for it.
Well, yeah, they're impossible. No, I don't know why or how, but I'm honored that he's a Milady. I wish. I will say, I wish he maybe embraced the Milady ethos and mindset a little bit more. I think he's just been ending all of his posts with Milady and
trying to like get a few likes here and there.
Yeah,
although he's going to get likes regardless.
Yeah, it's Vitalik. But yeah, I think there's often you have to make a very painful, uncomfortable, uncertain decision if you want to actually have change. And I don't think maybe Vitalik or the EF is set up to do that right now.
Have change.
Yeah, I don't think change is going to come from tweaking personnel slightly or changing. It's like you need to clear house, need to totally do a rethink, need to change.
That's where change is going to come from.
Yeah, need to change the foundation incentives. Maybe it shouldn't be a foundation. Maybe it should be a for-profit company.
A meta overhaul like Mark Zuckerberg's currently doing.
A little bit.
Scratch everything.
Yeah, and just do a reset. And then you get sort of a little bit of sunk cost fallacy, I think, when you're sort of, you already employ a bunch of people and you already have sort of a structure and you don't want to change it. And you're like, well, if I were starting today, would you choose the same structure? Maybe not. And I think part of it is, again, it's an evolution where in 2017, or I keep saying 2017, even 2015, actually, I remember the EF started versus ETH ICO. Anyway, at the time, really, obviously there were things like Stellar and things like Ripple, but for the most part, Bitcoin was kind of the king. And a lot of the ethos and a lot of the mindset of the community was around decentralization, and anything anti-decentralization was like very sacrilege. You were sort of bullied out. And I think the Ethereum Foundation is from that era when it would look weird for like the foundation to be having a Apple style keynote presentation. Like imagine there were like a Bitcoin foundation, like that would be very sort of counter to the end product. And I think the ETH Foundation came out of that era. Now it's like the Overton window has shifted. I think now people are much more accepting of that kind of interaction with a chain foundation where it's like, this thing is not, run by hundreds of thousands of like random anons around the world. It is like a little bit more sort of a corporate influence. It's not spreadsheet chain, but it's kind of somewhere in between. But hey, like that's cool. And there is a market for that. And I think the ETH Foundation sort of missed that, hey, there's been this shift in terms of accepting the level of influence and the level of, I think, force like a foundation can put behind its own vision. So I think that's a little bit what I see happening right now is like, the vibe kind of shifted out from under you. Yeah,
no, that makes a lot of sense. And I feel like a lot of these L1s and L2s are moving towards like a road of decentralization or whatever you want to interpret that term. But at the same time, like you said, they still need these foundations to, like hold their hand or bring them along or incentivize people to build on these chains, right? And so I don't think it's that bad to have like not a spokesperson, but like people who rally behind it.
Yes.
And whether that's like the Ethereum Foundation or the community or both.
Yeah, I agree. I think there's a stack and a spectrum of censorship resistance. I think most people, again, kind of inherit this view of censorship resistance being coming from the original Bitcoin white paper around, hey, you cannot revert transactions and there's no double spending and things like that. But if you look at kind of the stack today, there's a huge sort of ways that can happen, right? Like I can, refuse to accept your tokens, or as a wallet, I can like blacklist you. As an exchange, I can blacklist you. Can't send it here. You can on the OFAC sanction list, whatever. Many, many different ways to stop someone from doing something. Obviously, on the chain level, yeah, you should sort of enshrine that. But to pretend that like this thing is like nuclear war resistant, I think is a little bit insane. Like clearly, that's not true. And there are some trade offs that have to be made. So I don't know. I think like you being maybe more pragmatic is kind of the end goal, I would think.
What's your take on World Liberty Finance loving Ethereum so much?
That is a good question.
Like, I mean, maybe you have intel, maybe you don't, maybe you have an opinion, maybe you don't. I
get hit up all the time by journalists asking me for World Liberty Financial information and
as if you're a part of the project.
As if I'm part of the project. I'm not a part of the project. I'm not an advisor.
Invest?
We are not investors.
But yet I'm still asking you.
You're still asking me. Because it's interesting. Yeah. I also find it interesting. It's
fascinated is the word.
Yes, I'm also fascinated because it's such a I feel like group of outsiders for the most part. Like I think the vast majority of people who work in the crypto industry, who I know and I think are reputable and intelligent and plugged in, had no idea this was coming, had no idea Trump coin was coming. It was just like totally caught off guard. And yet there are some, and if you look at the founding team, a lot of them are sort of crypto outsiders. They're like, it's like, was it Corey, what's his name? It's like the real estate guy's son. Anyway, so it's like,
I don't know.
Anyway,
we did have one of the advisors on the show, but he has been in the space in like many different capacities, right?
This is Ogle.
Ogle.
Yeah, Ogle's great. It feels like
the security guy.
Yes. Yes. To be fair, I think some of the advisors are legit. They have like Sandy Pong from Scroll, and they have.
They also had Sandy on the show.
Yeah, and so
it's the whole Rolodex here.
Yeah. No, it's the whole crew. Yeah, you really are. I should be asking you about World Liberty Financial. I think you have more.
Actually, no.
Yeah. I'm curious to see how it plays out for them. I think as to why they did it on Ethereum. I think that's a little bit of like why do you rob the bank? That's where the money is. And it's kind of like that's where the capital markets are. Like that's where you have the most assets, stables, things that people want to invest and move. And it's kind of why like there was an NFT premium on ETH versus Sol last cycle. It's like there's just more capital there to buy stuff. And obviously Aave is sort of a main Ethereum protocol, and this is sort of like a front end for Aave, or it's like a separate market for Aave. It's still a bit unclear what's actually happening. To be honest, I found the whole thing a bit baffling. It makes me feel a little bit better that they're using Aave instead of trying to roll their own lending protocol like I think those guys did last time. But I don't quite know what the goal is or what the product is. It feels like it's just going to be sort of an Aave fork or Aave separate market, and that's kind of it. So
we handed you a piece of paper that asked you if you wanted to invest in it, would you be like, yeah or nah?
No, definitely not. I could have. I am an accredited investor. I could have invested, but
fancy.
Chose not to. I think the pricing was insane. But again, I think this is kind of maybe my apprehension around Trump coin too, which was I don't know what the point is. Like, what is the vision?
It's Trump coin.
It's Trump coin. Fair enough. It's funny because I like the NFTs that he put out. Actually, that was like very clever and well done. And
really?
I
felt the inverse.
You're a Trump coin holder. You're a Trump coin fan.
I'm a Trump coin holder. However, I felt like, and I've said this publicly on like a Twitter space the other week where I was like, I think Trump will capitalize on anything that can make him money.
Yes.
So I'm not shocked by the meme coin. And same with the NFTs and his watches and his sneaker collections and whatever, like he's going to create anything and everything that he thinks will bring him money.
Yes.
So with the NFT collection, I was a little surprised in the sense that I was like, oh, wow, it's like, launching on Polygon. It's all these weird little photos of him. But then at the same time, it's like for him at the end of the day, money.
Yes. I totally get the incentive for him to launch
I'm not
Bitcoin.
In his head, but I'm from the outside.
I get it. It's like the new Trump stakes, and
it's Trump stakes.
It's Trump stakes. At least
stakes on chain.
At least you're actually getting a stake. I think
it's not a big stake anymore at the moment. At the time of recording.
Yeah.
Not a big
not a big stake. I think it's maybe more like I'm trying not to like value judge people. If people want to trade, maybe later in the segment. If people want to trade meme coins, I think that's fine. It's like entertainment. It's like sports betting. I don't sports bet. If people want to do it, great.
Yeah. I
think it's a little maybe like demoralizing that the president, who I think is part of the campaign, has been very pro crypto, very explicitly pro crypto, which has pretty much like never really happened for a presidential candidate. I think there's other thing people forget that like it wasn't just, it was like no one else was saying these things. It was insane. The man was going on stage and saying free Ross back in May. Like so I think that was underappreciated.
Went to a Bitcoin conference.
Well, yes, he went to a Bitcoin conference.
Crazy. And it worked.
It worked. Shout out Bitcoin. There you go.
Shout out to Bitcoiners.
Shout out to Bitcoiners.
As many of you know, the Ethereum ecosystem is vast, but it's still extremely fragmented. Are you tired of how complicated it is to move assets across different chains? I know personally, I am. So with that said, I want you to meet Across, the most reliable, fastest, and cheapest bridge in the Ethereum ecosystem. Across has over 15 billion bridged and 1.7 million users. It's making cross-chain transactions simpler for everyone. Its intent-based design means users will get lightning-fast transfers between Ethereum and L2s like Base, Arbitrum, and Optimism in seconds, not minutes. For users, it's seamless bridging. For developers, it's providing native cross-chain integration. Across Protocol is erasing boundaries and unifying Ethereum. Experience the future of unified crypto infrastructure at across.to. That's across.to. Catch you all there.
But then to have, again, so 2 days before the inauguration, drop the Trump meme coin. And of course, there were all these.
Crazy.
It was just, come on, man. Like, really, now is the time to do
it had to be before he got in office, right?
That is kind of true.
According to the law.
That is kind of true. Maybe it was more like, why do it at all then? What is kind of
Melania?
That was actually the one that really, I think, kind of set me over the edge.
That irked everyone.
That was like Trump, okay, maybe he'll make it into some kind of, collectible kind of thing. And he kind of did that a little bit with the NFTs. The Melania one, I'm like, okay, this is just grift, man.
But she also launched NFT collections.
She did?
Yeah, and necklaces. She honestly tracks what he does.
Yeah.
Which she might be in like a team.
Yes.
I don't think she's sitting there like, Donald, I also would like coin. And he's like, whatever you want, sweetheart.
I think that is fair.
The teams are like, no, us first, no us. And then they're.
That was the other thing I'm very curious about, because again, most people I know in crypto did not know this was coming.
Yeah.
But then it was also I'm like, and Trump himself didn't even seem to know. I remember there was like a press conference and some reporters were asking him, and he's like, it's a few $1
billion.
But the reason they were using Moonshot as like the designated app for trading it, which is like a very niche in the weeds like app choice. I mean, at the time it was doing very little volume. And so it was kind of like a shibboleth. I'm kind of like, okay, someone who kind of knows crypto. It wasn't like they were launching it on Tezos or something like a ghost. Where you're like, all right, like this person has no idea what the fuck they're doing. Sorry, that's okay. And I don't.
You're naming.
We're not. I'm okay. Being a little bit more and more critical of Tezos, but
okay.
They're not going to come after me. Maybe. But
I get what you're saying.
Yes.
It does feel random. The moonshot and
I was saying it feels more on the nose and relevant. If it had been totally random, I'd be like, all right, this is some random outsider that somehow has Trump's ear that is doing his meme coin. This was like, this was like kind of a, if you know, kind of on crypto Twitter app. Like it wasn't doing that much volume before this launch. And so I'm like, this is like a very specific choice.
Well, I guess that's why I said random, because it wasn't doing a ton of volume.
True. I guess more, it seems like it's someone who's in the know when it comes to crypto. So it was interesting.
Yeah. What would you say is like the state of VC right now in crypto post new US Trump administration and just like the general sentiment?
Yeah.
Towards your people.
Yeah, my people.
The investors.
Yes, the most maligned, the most underappreciated.
That's right.
The capital allocators.
The backbones of America.
Yes. It's funny. I mean, zooming out, if you think about capital markets, think about venture within capital markets. Venture is in kind of a bear market. There was actually like this FT article, I think maybe like a month ago, that was going around that was kind of, doom and glooming about venture. Basically, hey, new funds aren't able to raise. New fund managers from kind of the 2020 to 2021 vintage are basically not raising new funds. And
do you agree with that?
That is 100% happening.
Yeah.
And those new dollars that are going into funds now are just going into sort of the blue chips, right? They're going into Sequoia and Andreessen and Founders Fund and USV and those kinds. And that is, I think, downstream of obviously macro higher rates and also just no IPO market, no liquidity, no DPI for investors from that time. So it all kind of tracks. Crypto venture is part of that. I also think there's maybe a good distinction between like crypto venture and crypto like hedge funds. Crypto venture funds are like a venture fund that they're very long dated, closed ended. We invest in equity only companies. Sometimes we do companies pre-token launch. Sometimes we buy tokens, but it's sort of this very long dated vehicle with a very long view of the investments versus rapidly trading in and out of positions, which is more on the hedge fund liquid side. For venture. There's also been this consolidation, but it's a little bit less harsh, I think, because the liquidity profile and terms in crypto are generally more favorable. So instead of looking at, hey, maybe this company will go public in 10 years, maybe this company issues a token in a year and you have a 4-year vest. And so you have a little bit more liquidity. You're generating a little bit more cash for investors, for your LPs earlier on in the fund life. And that makes it more attractive. But I think at the same time, you are now being judged in a different benchmark. I think that sort of earlier vintage I was talking about, that 2017, 2018 time, crypto is just there's just one kind of fund where it's like, I give you money and you go buy Bitcoin, you go buy some ETH, you go, invest into Coinbase, you do whatever. And you're kind of my crypto allocation. And I think then you sort of get judged in just pure absolute returns. Now, I don't really know any funds, maybe a few funds that are buying big liquid positions, because as a investor, it's like, well, you don't need to pay me 2.20 to go buy Bitcoin for you. You can just do that. And especially now with the ETFs, you should just go do that. And I will go and invest in sort of frontier startups, companies, technologies that are building in this space. Yeah. Exactly. So I think LPs are also splitting out their liquid crypto allocation versus their crypto venture allocation, which is sort of this different bucket. So I think crypto VC doing well relative to traditional VC, but I think also still hit a little bit by the sort of like, macro stick. That's obviously looking better. Yeah. It's looking better these days, but
sometimes.
Yeah, right. Yeah. Sometimes you just wake up and you have a lump on your head and you're like,
what was it today?
Yeah. Good times. Never a dull moment.
Do you feel like the Sequoias of the world are back in crypto? Because I remember after, 2022, when a certain 3-letter company blew up the industry.
The SEC. No,
the SEC. Well, I mean, hey, they also, put a hand in the space, but FTX, I felt like everyone was like, nope, we're done. And now I feel like they're kind of coming back.
Yes.
Do you like their contributions, or you're like, get out of here? This is our territory.
Yeah, it's like a turf war.
Yeah,
no.
Kickball.
I think in 2020, 2021, it definitely felt that way. Where I think they were looking at the same deals. A lot of them were spinning up dedicated crypto funds.
Right.
And it was irksome because I felt like a lot of the time they weren't doing the same level of underwriting that we were doing, and they would be pushing up prices, and I'd be like, all right, this is insane. Now it feels much more complementary, especially if you look at the deals that they're doing. It's stuff like Bridge, which Stripe just acquired as a stablecoin orchestration platform. We've seen Ribbit active in a few more deals. So it's these sort of CeFi, stablecoin payments, TradFi kind of sector, where I think there's actually like a nice synthesis between traditional venture, which I think has more sort of fintech experience, and crypto VCs who have more crypto experience. And that's more what we see in rounds versus, I think, traditional VCs going and, backing some new ZK VM chain. And it's like, all right, this is very random and kind of out of your wheelhouse. Maybe that will change. Maybe this will again become too tempting and the market will get really hot. I don't necessarily see that happening. I think this is actually kind of a nice stable equilibrium, but they are coming back more and more, although it's not that kind of rapid, 2021, hop on the train now before it gets out of the station pace. It feels more strategic around what are deals where we can really contribute and add value, and feel like there's a good upside to the investment too.
Yeah. What is kind of your take on investors being in the U.S. administration? Because I mean, like,
about like Sachs or
VC guy, David Sachs, VC. I know some A16Z people dropped their title to go hang out in the White House. Yeah.
I didn't get an invite. I'm like,
you didn't shill it.
I'm hurt.
Yeah.
No, it feels
Drop
great.
the title and they'll get you.
I feel great to have some finalists, some representation in the administration. I feel like I can see myself now. I mean, I will say not to get too political, but I was not a big Trump 2016 fan. Very chaotic. And obviously I don't think it was the most productive administration sort of as a result. This is a very, very different wave where it feels like there's this kind of marriage between DC and tech. I mean, there was sort of news going around today. Elon's, Doge. A lot of the workers are like these 20-something-year-old engineers who we've kind of like handpicked from, Tesla and X and SpaceX.
I didn't see that.
Yeah, and it's like these like total prodigies who are now working in the government. And I think that's actually very motivating and exciting, that it feels like there's this cool fusion of the way DC does things with the way SF does things, that ideally should be moving towards more efficiency, moving faster, more accountability, more transparency, like all the things people actually want to see from a government. And going back to the EF thing, this was sort of like a let's blow up the state and start over. That's very, very hard to do without that sort of overwhelming mandate, without the right team. I think that's why Trump failed to do that in 2016, and why I think it seems like he's having more success with it in 2024. So I'm optimistic. I'm curious to see what comes out of the administration, but at a minimum, it feels like there's appetite and capacity for change, which is kind of the two ingredients that you need. So I think, VCs, that's great. I think ultimately, I think it's about like having that sort of voice for tech in the White House. And I think that's been kind of missing for a while.
Mm-hmm. Yeah. Before we started recording, I asked you, are there any certain things that you'd like to talk about? And given that you've been an investor in the space for a while, I'm curious your thoughts on the general opinion towards venture capitalists in crypto right now. Do you think it's optimistic, negative? Do you feel like the market is shifting? And if so, how do you feel and deal? Feel and deal.
Feel and deal.
Yeah.
I think we talked previously about venture probably being overallocated in that 2020-21 vintage. I don't think crypto was isolated from that. I think a lot of funds that I think maybe have the name venture capital, but don't sort of fit the ethos of being a long-term investor, helping teams build the thing that they're building, having deep insight into the industry that they're investing into. I don't think a lot of those VCs are going away. And so when people meme on VCs, usually I'm memeing on them. Usually, what they're referring to is VCs back some project, they give it a lot of money. The project launches a token, it trades at some insanely high FDV, there's a very low float, and then eventually it just sort of bleeds out over time, and people say, "Oh, VCs are dumping," blah 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 blah. I think this is wrong for
who's dumping.
Exactly. I think this is wrong for a number of reasons. For one, the floats now are not meaningfully different than the floats back in like 2021. They've basically stayed the same over time. So there's not some new meta where, now we greatly restrict the supply to get the higher price. It's like, no, it's been the same the whole time. The VCs in the team are locked up. A standard vest for us is a 1-year cliff with a 4-year vesting period. So in the first year of trading, we literally have zero liquidity.
Like who's trading?
It's the people who received an airdrop. It's whatever. Yeah, so it's like you're trading against each other, and then
pointing fingers at.
Yes, exactly. And I think for us too, when we think about, I think the other sort of trend has been a desire to return to ICOs and democratization of access to investment. Which, to be fair, I'm not opposed to. I actually think it's cool. I think you probably don't want to go full ICO mode again. I think there were a lot of bad outcomes from that, but you also get like the Ethereums of the world out of ICOs. And so there is opportunity. And I think I don't want to be overly prescriptive about how people should be investing. I think the problem historically with crowdfunding platforms has just been adverse selection, right? It's not that, people say, oh, I would have invested in Stripe in, 2014. And I'm like, well, you couldn't have invested in Stripe in 2014. They wouldn't have accepted your money. They want money from people who are going to help them build the company, make it more valuable. And that's why they have access, which is like the number one thing for VCs. I think, again, most people sort of confuse those two of having, analysis, having picking versus having access. I think for VCs now, again, there's sort of this pressure from something like Echo, which is a crowdfunding platform. But I think Echo is actually very complementary to VCs, where even for us, when we're doing a round, obviously we want as much of a company as we can take, because we're very bullish or optimistic on a company that we're investing into. But we recognize that crypto is a little bit different than Web 2 in that oftentimes the way a project is successful is by having a bunch of angels on the cap table who can help advise it or give it feedback or expand his network or whatever. And so we try to make sure there's room to bring strategics and bring angels on board, which is kind of what Echo is trying to do. It's how do you create a army and how do you create a fandom? And it's like by having people have skin in the game. And even if it's, only like $1,000, $2,000, like, hey, that creates enough incentive to like, right? Yes, exactly. So I think that's cool. I think that's great. But again, I think that kind of mirrors the way we already sort of practice venture capital, which is trying to make sure that the teams are set up to have the highest probability of some huge outcome and some huge success versus, trying to skim a few pennies on the dollar or, trying to hope, hey, we get a, 50% return. Great. Like for us, that's a terrible outcome. We want something to be sort of generational and have,
more than 50%,
more than 50%, at least 60%.
Yeah.
No, it's, I think I always say people are more surprised by the upside in crypto than by the downside. And I think that's been a recurring theme in my time is, everything, your expectations always get surpassed. I remember like looking at DeFi in 2020 and 2019, and DEXs back then were doing $1 million, $2 million a day in volume. And I was like, well, if this thing does really well, maybe there'll be $100 million a day in volume.
Now it's
I think the past 24 hours
during this recording,
spot DEX alone have been $25 billion in volume.
Yeah.
And so I think more frequently you are surprised to the upside than to the downside. And therefore it pays to be optimistic.
I like that. I think on the front of crowdsourcing and the conversation of capital formation, I feel like a lot of people are saying, oh, it's they launched a meme coin and they got all of this market cap. It's capital formation. Look what they did. I feel like, I don't know how I feel about that.
Yeah.
I'm curious your perspective, especially as like a proper investor. Sorry, not proper. You are a proper investor, but like the sense that like, I think there's value in crowdfunding, but when it comes to bringing that value through like a meme coin, that could easily be pulled away in any second or chance that, like the community decides to take it back. So do you see a bunch of pros and then like obviously on the other side cons when it comes to crowdfunding and these like capital formation markets through tokenizing things or meme coins? And if so, like, do you feel like that's a threat? Nah, it's not a threat.
It's not a threat. I'm
going to answer that question for you.
Yeah, no, I think there was a little bit of that thread. I think especially coming out of the Solana meme coin community, which is most of meme coins are launching, when you saw Bonk and you saw Bonk bot and people are like, oh, well, maybe there can be this ecosystem of projects around the token. I think in practice that just hasn't really happened. It's like, no, people just want to create the token, which is fine, just to be clear. But I don't think you should, have these delusions that you are creating something bigger. It's just people want to trade because trading is fun and interesting and it's a fun game. I think there's nothing also wrong with speculation in isolation. Most assets have gone through some sort of speculation period. Even beyond .coms, you had railroad speculation boom, right? Telco speculation. Yeah.
How could we forget the railroad?
I mean, that provides the capital to build all the stuff that now we get to enjoy. And so I think Matt Huang from Paradigm has this blog post, Casino on Mars, which people also kind of meme them for a little bit, but I actually think it's a very apt description, which is the speculation creates these sort of big waves. But if you zoom out, you get this sort of line that goes up and to the right. And that is where you get some of the meat from every sort of speculative wave that goes to fund something real that can be long lasting. And I think that's just a little bit of the nature of venture and new technologies is people overestimate it and then they underestimate it. And ultimately the people who keep building, that's how you get something great.
Cool. I had some questions that you could give pretty fast responses to. What would you say makes a good investor?
You always have to ask like why you think the things that you think, and you need to be able to go like 3-4 levels down. And I think a lot of people just can't do that. And that's kind of, this contrarian mindset. That's like, that is kind of, it is being able to be introspective and questioning.
What is something that startups ask for the most from investors?
Money.
I knew you would say money. Okay. Second thing. More money. No.
I think one of our number one value adds beyond product sort of go-to-market stuff is hiring. We have an amazing talent team. Talent is like the fuel that drives any startup. And so, and it's everything around hiring. It's like, how should I interview people? What is comp? How do I manage age? It's all that kind of stuff. So talent's huge. What
would you say is something that kind of irks you when you see founders spending money on?
I mean, people would naturally say like crazy events, which I agree. I think people should maybe be examining the ROI of some of their events a little bit, but I think it's more time. I think the number one thing that kills startups is just like not moving fast enough. And I've seen a lot of teams that have the right idea and they were just too early, or they, couldn't kind of seize it, and then they die. And like, that's the most painful. It's like, you were right, but you just missed the timing a little bit. And I think that's the number one thing that I think people waste money on. So
events.
No.
Time?
Time. Time.
What does that mean? Wasting money on time.
Time is ultimately that is where your salary goes, right? That's where all the sort of talent. That's usually people's number one expense is talent. If that talent is not being spent to help you move faster, ship faster, iterate faster, then ultimately that's kind of the waste. And so I think the teams and momentum is also something that is just really, really hard to get back once you lose it. And that's why I think we have all these ghost chains of like, why would you deploy on chain XYZ now when all the momentum is gone? And so I think teams underappreciate that when they have momentum, they think it's always going to be there. And then the wave kind of goes out and it's really, really hard to get it back. So speed is kind of the killer. And I think
killer in the winter.
It's in the winter. It's if you don't have anything you can do to spend money to move faster, you should be doing. But I think a lot of teams, they spend the money and they don't get the time. So
okay, that makes sense. What about your favorite sector right now that you're like just obsessing over?
I'm trying to keep up with like a term for this, but I think it's this sort of sector around like consumer money games, which is, it's a game.
Give us an example.
Oh, I think one that I thought was very cool recently was Fresa. I don't know if you play that or check that out. It's cool. It's it was an AI agent, quote unquote. It was basically just a GPT-4 prompt and pretended to sort of be this agent that had a treasury on chain, an actual smart contract, and say, hey, like, your goal is to guard this treasury, not give it to anyone else. So don't approve any transactions. And that's sort of your objective. And people could,
I did see that.
People could send in money, right? Or send in a message for an escalating fee. To try to convince it to give
the money up.
Yes. Yeah. And eventually someone got it, right? They had this sort of like a, jailbreak prompt that sort of broke GPT-4. But I'm like, that is very cool. And they did another one where it's like you had to get the robot to fall in love with you. And then that was how you jailbroke it. And there's sort of like a bunch of other, I would say, like Crypto the Game, I think is another great one. I think they're launching season 4 soon.
Yeah.
Super, super fun if people haven't tried it or played it yet. It's these sorts of things where there's some sort of money involved in the competition, but it's not like a, RPG or like a first person shooter in AAA. It's like, no, it's some sort of fun social. Yes, exactly. I think those things I see a lot more people just trying stuff in that category, smart founders trying stuff in that category. I think something like that is really going to go mainstream in the next year or two.
Favorite blockchain right now?
Favorite blockchain? I'm a little biased, but I'm going to say MegEth. It's a Dragonfly Portco.
Yeah.
I think they're doing really cool work. And I think, again, it kind of comes back to how do you get that sort of really clean end user developer experience? You're going to have super, super low latency, super high throughput, but it's EVM. And so you can use all the EVM goodies with it. And I think they're going to be launching soon. So watch out for MegEth. Watch out for MegEth.
I like that. Okay. Best investment. Whichever one came to mind first.
Yeah. I guess in the immediate term, we did Athena's seed, which has been...
We had Athena on the podcast.
Yeah. They've been crushing it. They're clearly one of the winners from this past cycle. I think it's all the team just out executing and this was a sector that I think a lot of people just wrote off. Teams tried this idea in the past. This was kind of post Luna, post FTX, all kind of smelled too dangerous to touch. And so they, I think, really have been bold and trying something fresh in that area. So that's been great for us. But I think all my investments have taught me something. So they're all valuable in their way.
They are. They're all your children.
All my children.
Yes. What do you look for in a founder?
There's a bunch of things. I think the one that is the most maybe I think most consistent is like some founders are like almost like not truthful with themselves. It's like when you try to come on too strong and you kind of bullshit, then it's like I think that ultimately sort of leads to problems down the road for the team. But I think the founders that are introspective, that acknowledge the risks, that have sort of thought through and know their entire category end to end, those are the ones that I think end up winning. I think Shane Copland from Polymarket kind of comes to mind. Shane's awesome, but he's also just a prediction markets nerd. He knows anything and everything about prediction markets, the history of prediction markets, all the trials and tribulations of all the different paths. And so I think that has allowed him to really guide Polymarket to the success that they've had. I think other people I see try to take an idea and they copy paste it. And it's like, why are you making the choices that you're making? And kind of go back to this like 3-4 whys question. They don't know. And if you don't know, then ultimately it's I think you end up making the wrong decisions down the road. So
yeah, that makes sense. Maybe one of my other questions already asked this, but what is a category that you're paying attention to that you think other people should be watching?
I don't know how much alpha I want to leak on this podcast. I will say, I think there's a weird dislocation in the market right now around applications, specifically like trading interfaces, wallets, Telegram bots, things like that. I think interfaces end up having a ton of leverage because they have this direct end relationship with users. And therefore they're able to capture more value. And you see that in terms of monetization. Most of the highest revenue projects from the past cycle were not chains. They were not DeFi protocols. They were applications. It was
built
like
on top of it, right?
Yeah. Photon is a Solana trading interface. I think they made like $600 million last year or something like that. And that's just one example. There are a number of these different bots, apps, wallets that have made, and they're sticky as well, which is the sort of like litmus test or sort of gold standard that we look for when looking at investments. I think right now, again, going back to this capital markets structure problem, they're kind of underallocated. They're underallocated too by investors because there's not really a path towards liquidity, right? Like they can't IPO, and the IPO window is closed, especially the crypto IPO market has been closed in the US. Maybe both those will change this year, but for right now, that's the case. If they launch a token, really hard for it to get listed. A lot of exchanges won't list that token, so they have no liquidity. I think iGaming platforms sort of suffer the same problem. But I think ultimately, I think markets will be rational. I think those things will change. We already see winds of those on the regulatory front coming. And so it seems to me that like this area that there's extreme willingness to pay, extremely high retention, seems like there should be higher valuations, therefore more capital allocation. So watch this space, I guess.
There's that alpha.
There you go.
Oh, last thing, Tom, can you leave us with a piece of advice, something you've carried with you throughout your time in this space?
Be kind. You know, it's a small space. It's a small space, and you see the same people floating around. And so, be kind to people. Everyone remembers the assholes too. So
that we do. Yeah. That we do. Thank you so much for coming on today.
Thanks for having me.
Pleasure.